Let us move ahead, and now we write something about marginal propensity to consume. The value of the increment to consumer expenditure per unit of increment to income is termed as the marginal propensity to consume. So B indicates the change in consumption per change in income. That means change in consumption divided by change in your income will be the marginal propensity to consume. For example, if I say that your marginal income was 5,000 and your marginal consumption expenditure was 3,000, so 3,000 divided by 5,000 will give you 0.6, and that becomes that ratio 0.6, which is nothing but the same B that we were talking about in that equation. That technically is known as marginal propensity to consume. So let us define all these components in the equation. Let us move ahead and now write up something about average propensity to consume. The ratio of total consumption to total income is known as the average propensity to consume, that is APC. Now here we will not talk about the marginal income and marginal consumption, it is rather the total income and total consumption. So if you remember in the example that I gave you earlier, my marginal income was 5,000, correct, and my marginal consumption expenditure was 3,000. That gives us the ratio, that is marginal propensity to consume, as 60% or 0.6. But there was some additional expenditure required as a minimum level of expenditure for survival. That in my example was 500. So if your total income is 5,000, your total expenditure will never be 3,000. Your total expenditure will be little more than 3,000, and that is where when you compute the average propensity to consume, you have to take your total consumption divided by total income. So in our example, total consumption was 3,500 and total income was 5,000. So to compute average propensity to consume, you will take the equation as C divided by Y. Let us define the variables. C is the total consumption, Y is the total income, and let us write a note over here. APC, that is average propensity to consume, is calculated at various income levels. The proportion of income spent on consumption decreases as income increases. Income is either spent or saved. Thus, just as consumption, saving is a function of disposable income. Now let me explain this point to you before you write. See, as and when your income is increasing, what is happening parallelly with the increase of your income? A portion of that income is spent, and yet another portion of that income is getting saved. So as and when your income grows higher and higher, correct, your consumption will also increase, but your savings will also increase, right? So simple common sense, if 60% of your income you are spending, that means if marginal propensity to consume is 60%, the marginal propensity to save will be 40%. How I got 40%? From 1, that is the entire 100%, if you subtract the marginal propensity to consume, that is 60%, the remainder will be nothing but 40%, which is the marginal propensity to save. So even the savings is a function dependent on the income. Let us move ahead and now write the saving function. I have already explained you this. Savings is also a function of disposable income. The saving function shows the functional relationship between national income and savings. Disposable income equals to consumption plus savings. So we can write the function of savings as income minus consumption. Let us graphically understand this whole thing. Now this is a combined consumption and saving function. Can you notice on top it is consumption function and at the bottom it is savings function. Please look at one thing, that there are two different levels of income, Y1 and Y2. When Y1 increases and comes to Y2, you are earning something additional, and out of that additional earnings you will spend some money, and you will invest some money. At this level of income, that is Y1, can you notice your income, that is Y, which is equal to C plus S, consumption plus savings, indicating total income, that was equal to your consumption. That means at this point, literally at this point, you have nothing to save. You have nothing to save. If your income goes beyond this, then your consumption will be increasing, but at less than proportionate level. That means if from this point your income increases, your consumption will also increase, but your savings will also increase, and therefore this area indicates your saving. However, if your income is of any level less than Y1, that means if you are earning anything less, but because you have to consume a certain amount of expenditure anyway, it will basically result into this saving. And if you can now reflect the same thing in the lower part of the graph, look at this conjunction point where income is equal to consumption expenditure. At the savings graph, you find the savings vertically is 0. That means 0 savings over here. Whereas at the Y2 level of income, there is some portion of savings. So can you notice one thing? Some portion of your income you have consumed, and this part you have saved. Whatever you are saving is going to your savings above 0 level. However, if your income is below Y1 level, you will result into this saving, and this saving indicates your savings are negative. So just try to understand this whole graph where the consumption and saving functions both are given together. Don't forget, consumption plus saving will be giving you aggregate of your total income. That is this equation, Y equals to C plus S. Please try to carefully understand. Let us do one thing. Let us write some notes about the better understanding of this graph. And here we go. The consumption and saving function. As per above diagram, below Y1 income level, consumption is more than income, so savings is negative. Above Y1 income level, consumption is less than income and saving is positive. At exactly Y1 income level, consumption and income is equal, and therefore the saving is 0. As the level of income increase, average propensity to consume decreases and average propensity to save increases. Let us move ahead and continue writing further. This part also I have explained you already. What is marginal propensity to save? If you can recollect the example that I gave you some time back, if the marginal propensity to consume is 60%, how do you determine the marginal propensity to save? It will be 1 minus the marginal propensity to consume. That will be 1 minus 60%. That means 100% minus 60%, that will give you 40%. We would say the slope of the saving function is the marginal propensity to save. That means for every additional income that you earn, how much is your additional saving? That proportion of incremental savings with respect to the incremental income is termed as marginal propensity to save. With increase in disposable income, the proportionate increase in consumption is denoted as B. You know that already. The remainder 1 minus B is the proportionate increase in saving. The proportion of increment in savings with increase in disposable income, that is 1 minus B, is called the marginal propensity to save. In other words, the marginal propensity to save is the increase in saving per unit increase in disposable income. Let us move ahead and continue writing further. MPS, that is marginal propensity to save, which is denoted as 1 minus B, equals to delta S by delta Y, where 1 minus B indicates the marginal propensity to save, delta S is change in savings, and delta Y is the change in income. Write a note below that. MPC, that is marginal propensity to consume, is always less than 1 but greater than 0. That means B should be greater than 0 but B should be less than 1. And marginal propensity to consume plus marginal propensity to save taken aggregate, it will result into 1. So it is implied that marginal propensity to save, which also has the function of marginal propensity to consume, we will follow that even the marginal propensity to save has to be greater than 0 and less than 1. Thus, saving is an increasing function of the level of income, because marginal propensity to save, that is 1 minus b, is positive. The saving increase as income increases. Let us move ahead and write further about average propensity to save. The ratio of total savings to total income is called average propensity to save. So here you are not going to take the incremental savings with respect to the incremental income or marginal savings with respect to the marginal income. It will be total savings divided by total income, and that is what we call as average propensity to save. So let us define the variable. APS stands for average propensity to save. S is the total saving and Y is the total income. Let us move ahead and take up questions based on what we have discussed, beginning with question number 1. So the first question reads like this: what will be the value of average propensity to save when they have given two cases? One is C equals to 200 and Y equals to 1000. First of all, you should be crystal clear with the meaning of these variables. C stands for consumption and Y stands for income. So in the first case, they have informed you consumption and income. So what you need to understand over here is, if consumption is 200 and income is 1000, it is obvious that savings will be how much? Income minus consumption, that will be 1000 minus 200, that is 800. So 800 will be your total savings and your total income is 1000. Mind it, the question has not asked you marginal propensity to save. It is asking you average propensity to save, and average propensity to save is computed by taking what divided by what? Do you recollect? It is by taking total savings divided by total income. Correct? Total savings divided by total income. So in this case, total savings will be 800, total income is 1000. Average propensity to save will be 800 divided by 1000, that will be 0.8. In the second case, however, they have directly given you S and Y. So you know how we are going to determine the average propensity to save? Directly by dividing S with Y, that is 450 by 1200 will give you the answer for the second case. So let us write up the answer for these two cases quickly. So the first part, I have explained you all these things. APS stands for average propensity to save. S is total savings, which will be Y minus C, that is income minus consumption. In this case, it is 800, and Y is the total income, which is 1000. So APS in this case will be 800 by 1000, that is 0.8. Let us move ahead and deal with the second case. Here S is given as 450 and Y is given as 1200. APS is S by Y. You know, same way you can define the variables, and when you compute APS, it will be 450 divided by 1200, that comes to 0.375, the average propensity to save. Let us move ahead and take up the next question for practice. That will be question number 2. Let us read this question. It says, calculate marginal propensity to consume and marginal propensity to save from the data about an economy which is in equilibrium. They have given national income is 2500, autonomous consumption expenditure is 300, and investment expenditure is 100. So guys, can you understand one thing simply, that your national income is 2500 and investment expenditure is 100. So it is implied that the consumption expenditure will be the remaining amount, that will be 2500 minus 100. Why we are talking about this? Because of this line about an economy which is in equilibrium. When an economy is in equilibrium, what will be the outcome? The national income will be matching with national expenditure. Are you people following me or not? When I say when an economy is in equilibrium, national income will be same as national expenditure, and expenditure comprises of two components, consumption expenditure and investment expenditure. So consumption expenditure is not given, autonomous consumption expenditure is given. What is autonomous consumption expenditure, by the way? You remember we have discussed one concept, that equation, what was that equation? C equals to A plus B into Y, the consumption function, correct? C equals to A plus B into Y. Y is the variable which is an independent variable indicating the total income, and B is the marginal propensity to consume, and A was a minimum level of expenditure without which people will not survive. That is this autonomous consumption expenditure, that is 300 in this case. So this is A, correct, and this is the investment expenditure. So because the economy is at equilibrium, national income will be equal to national expenditure. From 2500 you subtract 100, the balancing figure 2400 will give you the total consumption, and out of which the autonomous consumption is 300. So remaining consumption will be the factor B into Y. So through that you can find the marginal propensity to consume, and once you get the marginal propensity to consume, that is the ratio B, then marginal propensity to save is simply 1 minus B. So let us look into how to present the solution. Y equals to C plus I. So Y is your national income and C is the consumption and I is the investment. So 2500 equals to C plus 100. So C's value will be 2400. Let us move ahead, and now what we do is we write that main equation C equals to A plus BY. Let us define all the variables. C is the consumption, A is the autonomous consumption function or autonomous consumption expenditure, that is 300. B is the marginal propensity to consume, and when we put the values we get these values. 2400 equals to 300 plus 2500 minus B. So we will shift this 300 to the left hand side, and what we get, 2400 minus 300 equals to 2500 into B. So we get 2100 equals to 2500 into B. So B's value will be 2100 divided by 2500, that is 0.84. This is the marginal propensity to consume, and we know the marginal propensity to save will be 1 minus the marginal propensity to consume, that will be 1 minus 0.84, and that will be 0.16. Let us move ahead and take up the next question, that is question number 3. Let us read this question. An economy is in equilibrium. Guys, the moment you find that the question conveys this kind of line that an economy is in equilibrium, that means your income and expenditure will be same. Calculate national income from the following. Now they have given autonomous consumption, marginal propensity to save is given, and investment expenditure is given. So how do you solve this? Very simple. You just have to begin with one thing, that marginal propensity to save is 1 minus the marginal propensity to consume. So you may define the variables, and if marginal propensity to save is 0.2, marginal propensity to consume will be 1 minus 0.2, that will be 0.8. Then the main equation over here will be C equals to A plus B into Y. You may define the variables over here also. C stands for consumption, A stands for autonomous consumption expenditure or consumption function, that will be 100, and B is marginal propensity to consume, that is 0.8 in this case, and Y is the total income, or you can call it as national income. So putting those values over here, C equals to 100 plus 0.8Y is what we get. Let us move ahead and continue writing the solution further. We know one thing, that Y equals to C plus I. So C is the consumption expenditure and I is the investment expenditure. So Y stands for national income, C is the consumption, which is 100 plus 0.8Y, and I is investment. And when we substitute these values, what we get as value of Y, which is summing up to 300 plus 0.8Y. So Y minus 0.8Y will give you 300. So 0.2Y is 300. So Y will be obviously 300 divided by 0.2, and that is 1500. Let us move ahead and take up the next question. That will be question number 4. Let us read this question. Suppose the consumption of an economy is given by C equals to 20 plus 0.6Y and investment I equals to 10 plus 0.2Y. What will be equilibrium level of national income? So you just have to apply one simple concept, that consumption plus investment taken together should match with your national income, correct? Because Y equals to C plus I. Following that, what you get over here, Y equals to C plus I, define the variables. Y is the national income, C is the total amount of consumption, I is the total amount of investment. So aggregate of these two will give you the national income, that is Y. So Y will be computed through this equation, and the value of Y what you get will be 30 divided by 0.2, that comes to 150. Let us move ahead and take up the next question. That will be question number 5. Let us read this question. It says, suppose the consumption function C equals to 7 plus 0.5Y, investment is rupees 100, find the equilibrium level of income, consumption and savings. So the point is very clear. Consumption function is given, investment is given, and you know one thing, that aggregate of consumption plus investment will eventually give you the national income, correct? That is Y. So very easily you can present the solution over here. In equilibrium, Y equals to C plus I, define the variables. And substitute the values in the equation and try to simplify the equation. You will get the value of Y over here. Y comes to 214. Let us move ahead and find the other parameters. So because Y equals to C plus I, you have value of Y and I defined over here. The balancing figure will be C. So C comes to nothing but 114, and S equals to Y minus C. In fact, whatever money you have invested is the amount that you would have saved, right? So savings and investment will always be same. So savings will be same as investment, and that comes to 100. Let us move ahead and take up the next question. That is question number 7. Let us read what is given over here. If saving function S equals to minus 10 plus 0.2Y and autonomous investment I equals to 50 crores, find out the equilibrium level of income, consumption, and if investment increases permanently by rupees 5 crores, what will be new level of income and consumption? So basically they have asked you the level of income and consumption when investment is 50 crores, and later part when the investment increases by 5 crores, what will be the revised level of income and consumption. So very easily you can solve it based on what you have done earlier. So let us look into how to present the solution. In a two-sector model, savings will always be equal to investment. That you should keep in your mind. Savings will always be equal to investment, because when you have earned something, a portion of that you will consume and the balance amount you will save. and it is implied that savings will be invested. So savings will always be equal to investment. So S, that is savings, is given as this function and investment is given as 50 crores. So when you are applying the calculations, what you get, you will get the value of y through this equation, and value of y comes to exactly 300 crores. Let us move ahead and write the later part of the solution. By substituting the value of y in savings function, we get S equals to minus 10 plus 0.2y. It was given already in the question. Substituting the value of y as 300, we get S equals to 50. And by substituting the value of S in consumption function, we get C equals to y minus S. Y is income, S is savings. So consumption will be 300 minus 50, and that comes to 250 crores. So this will be the answer for the initial part of the question. At later part of the question, you just have to make one small change. Investment increases by 5 crores. Logically, if investment increases by 5 crores, this S will not be 50, it will be increasing by 5, it will actually become 55. If that becomes 55, what will happen to the corresponding amount of income and consumption, that you will have to determine. Let me take you ahead and we take up the later part of the solution, where investment increases by 5 crores. So revised amount of investment will be 55 crores, and you should never forget that savings and investment will always be same. So when you substitute these values now, you will get the same approach, but the values will be different. This time y will be 325 crores, and when you substitute the value of y, you will be getting the balancing figure as consumption. So consumption will be 325 minus 55 crores, it will be 270 crores. Let us move ahead and take up the next question, that is question number 8. Let us read this question. Given the empirical consumption function C equals to 100 plus 0.75y and I equals to 1000, calculate equilibrium level of national income. What would be the consumption expenditure at equilibrium level national income? Now this is again very simple. You notice one thing, I is given as 1000, and whatever money you have invested, it is outcome of your savings. Over here in this equation, consumption is given as 100 plus 0.75y. So you know 0.75 will be actually the marginal propensity to consume. So the marginal propensity to save will be 0.25, and you can connect that with the investment amount, and you know one thing, consumption plus investment will give you the total expenditure, and that is going to match with your total income, that is the national income. So let me show you how to solve this question. In equilibrium, y equals to C plus I. Define the variables. Y is the national income, C is the consumption, and I is the investment. Values are given to you. You just have to substitute everything, and you have to find the value of y. So y over here will be 4400. Let us move ahead, and now what we do is, by substituting the value of y in consumption function, you just have to find the value of consumption. So 100 plus 0.75 into y value is 4400. So substituting the value of y in the consumption function, what you get is 4400 into 0.75, which will give you 3300, and 100 added to that, the value of consumption comes to 3400.